Mehra joining in. She's founder, chairperson and MD First Global. Devina, welcome. I know you speak today as a market expert. I know you speak as someone who has understood Dubai, lived in Dubai also for a while. I mean, I think a lot of Indians have some connection to the Middle East and these countries, either relatives there, etc. So it's a difficult thing to watch. But I want to get your perspective first from the point of view of Indian markets Monday. The reason we wanted to also put this show together is because a lot of people watching are going to have that fear about what's going to happen Monday morning.
No, I'd rather not start from there because, you have to have the context as to what I'm talking about.
Sure.
So, I mean, while I'm no geopolitical expert, the point is that even in my January interviews, I had said that if they strike Iran, there are going to be consequences because Iran is not a small country. Just to give you a sense, its area is more than half India's area. It has a large population. It has a large arsenal of weapons. And also remember the geography of Iran, as a friend was pointing out, that it is surrounded by either deserts or mountain ranges. So it is a country which outside invasion in terms of land invasion is near impossible. So now what are you trying to achieve with this? You are saying that let's strike the leadership, let's strike some key targets and the people have to rise up and overthrow the regime. Now this is not going to happen because the guards with the weapons are still there, the ones who did not hesitate to kill tens of thousands of protesters. So, and of course, it's been that every post in Iran, they had 4 levels of contingencies that if so-and-so is killed, then who goes like that. So this is not going to end very, very easily. The other thing is that Iran is playing this strategically. So they are hitting very visible targets or trying to hit very visible targets, basically increasing the risk premium in the whole business. So it is so for instance, they shut the Straits of Hormuz. Now a military maybe a military escort can be found for the oil tankers, but the point is that now the insurance companies are not willing to insure oil passing through those straits. So effectively you have stopped that. And similarly, I think by trying to hit the visible civil infrastructure or the very visible symbols in the region, you are saying that the risk premium for that entire region will go up, that its safe haven image goes away. But having said all of that, let me also say something which I said on the day the Russia-Ukraine war broke out little over 4 years ago, which is that we studied data over 50 years of every geopolitical turmoil. And it was very visible that the markets around the world react just before, just after. But 6 months, 1 year later, and most of the time the conflict is still on. Conflicts don't get resolved in a week's time. That's been the history even of very mismatched adversaries like US and Vietnam. But the markets forget about it. So if your narrow lens is markets, yes, they forget about it. And this is not a statistical kind of study. Every single case. So, the 2 Gulf Wars, 9/11, US bombing Libya, whatever instance you take, the markets of countries which are not directly in the conflict, forget about it. So that's the data.
Devina,
I remember 6 months after the Russia-Ukraine war, I saw a newspaper headline saying the Indian market has forgotten about that there's a war going on. And I said it on the day. That's the data. So there's no reason to panic.
Sure.
Yes, there will be an impact.
Devina, can I come in? Devina, can I come in? Devina, I don't know if you can hear me, but can I come in, please? Yeah. So, I'll never debate with you on data. And I'm sure that 6 months down the line, this will turn out to be true. You said it first here, completely fine. My question is because India is linked to this from a crude perspective, and Iran kind of becomes an epicenter of what could happen to crude prices in the very short term to the near term. How do you see that impacting sentiment as well as maybe flows and valuations, etc.?
Okay, first of all, on crude, much before this happened, our view was that given the crude price trajectory, it was due for an up move. In fact, in our last rebalance about a month ago, we further cut US equities in our global multi-asset funds, and we increased commodity exposure, which included crude-related ETFs as well as metal-related ETFs. So that was anyway our call. Now let me just come to, yes, there will be a near-term impact, especially if supply is disrupted and all that. But let me also tell you something about crude, that in any crude producing nation, no matter which regime comes in, old ruler, new ruler, invader, nobody wants to disrupt crude. So it's only a sentiment thing that, yes, there's a problem in the region, so crude prices will spike. But look at again the history. No one disrupts crude. That's the cash cow. That's why the people are there. I mean, that's why they want control of that country, is to get the crude. So no one disrupts crude eventually. So it is only, a fairly temporary thing. But crude, given the prices it was in and where, the long-term trajectory had been, it was due for, in any case, some increase. So yes, that increases the import bill for India. It changes the raw material cost for a few industries, more than a few industries,
Sure.
quite a few industries, if you look at all the downstream. But that was, we've lived with far higher crude prices for longer. It is not the end of the world. It was, as I said, due for an up move, but the conflict-related crude is all sentiment. It is, no one disrupts crude supply. ISIS didn't do it. Nobody does it.
So Devina, that brings me back to the point with which we started the conversation, and you rightly said you want to set up the context first. But for people watching this and trying to understand what the next couple of weeks are going to look like, you talked about markets coming back to the mean in a 6-month trajectory. But we've had a series of global shocks from the Indian equity perspective, and then the underlying sentiment has also been a bit low. Is there an opportunity you will see with the shake-up we might see for the next couple of trading days, or is the investment philosophy right now to stay on the sidelines?
If you were not invested to the full extent of your equity allocation, please take advantage if the markets go down. So I would still say that be invested to the extent of your equity allocation, which should not be 100% of your portfolio. Let me underline that. But whatever it is, if you were waiting for a correction and a correction does happen, please go ahead and invest. So that is still my recommendation. It may not be in, you may need to get out of stocks which you got into. That's a different story altogether. But overall, I don't think it's a time when you should get out of equities or reduce your equity allocation.
And when you're saying that if you have not invested to your full capacity, still go ahead and invest, are there safe havens you're seeing within that equity universe who would be relatively unaffected? Obviously, the crude impact and all of those, impacted stocks will be there. Your tires, your airlines, your oil marketing companies, and, Sumit Sarkar did a presentation on that as well. But what do you think stays safe and dry from the Indian context?
Aviation, we have not been invested in anyway, so that's not, I mean, that's like, to our mind anyway, a high-risk place. So, I mean, we've never been any significant investors in aviation. For example, OMCs, yes, we do have investments, and I don't think we're planning to change that immediately or anything like that. A lot of the other industries where we are overweight to kind of a little more than market weight would be pharma, healthcare, auto components. So that is not changing much. FMCG, a few companies, I think the total might be overweight. And we are in the middle of a rebalance anyway, so we might change some of those things. Yes, I mean, even for FMCG, there will some of the inputs are petrochemicals, so on the margin, there will be some impact, but I don't think any of that is going to be a crippling impact.
Got it. Okay. Devina, one final question. Where is it that Indian markets become slightly attractive for the long term? Should this protracted conflict, if it is protracted, lead to a near-term sharp downticks? I mean, are there some valuation levels wherein you would want to go all in, if you will?
So, I mean, anyway, my recommendation has been that you remain invested, because it's very difficult to say that you'll catch the exact bottom. I mean, except in a backward-looking chart, you would never be able to catch the exact bottom. And that's the truth of the matter. I mean, in markets, if you look at long-term, 10 years, not even 10 years, if you look at 20, 30 years, there have been many times when there's a sudden crisis, a sudden fall, but, those kind of falls never last. And in terms of valuations, I don't think if you go industry by industry, there's no point looking at index level valuation, but industry by industry, nowhere are we at extreme ends. Also, as I expected, the Q3 earnings have shown an uptake. It's showing up more for the manufacturing companies than the services companies, because the services companies had a charge based on the new labor code. But if you actually net it out, overall, the earnings have been accelerating, which means that, again, the valuations are becoming further attractive. And as I said, in any case, they were not at extreme end. They were not as if that, these are the highest Ps you've seen for any industry, or even many of them were even below averages. So that, I don't think, the market has been particularly unattractive. And if you get some lower prices to enter, yes, you should consider that.
Okay, thank you so much. Devina Mehra there, speaking about how she's seeing the markets. Devina, you want to make a quick comment on how you feel as someone who has lived in Dubai for long, when you see, that is out of what anyone thought. This is always considered a safe haven. And
right. So I think that is Iran's strategy, and I don't think it's a bad strategy from their point of view. That instead of trying to hit big installations, you are changing the safe haven image of some of the countries in the Middle East, which actually hits their economy more than anything else. And they may be hoping that they put pressure on the US that stop this. It will really hurt us. So that may be their strategy. Just as a conjecture. And as I said, they're increasing the risk premium. They're increasing the risk premium on oil tankers. They're increasing the risk premium on anything related to the real estate and economy of some of these countries. So, from a very kind of distance thing, I can say that. Of course, it is, you have friends and family there, and it is harrowing to watch all of that. And that's the way I think Iran is playing it.
and that's the shock and awe. Thank you so much, Devina Mehra, for speaking with us.